One of the major risks that investors face whenever opening a new startup is the risk of failure or losing their money. Therefore, losing capitals. In my opinion, whenever opening a new business, you shouldn't always invest all your money in this business because there is always a risk in losing their money or your capital in it.
So, in my opinion, two things that are very important to take into consideration when deciding to invest through these platforms in startup projects are, first of all, the possibility of dilution of stocks. And this is because normally what they do is that they take more than one round to raise the capital. So say, for example, you invest during round one, you have a risk that during round B, your shares would be diluted. Also, it is important to take into consideration that while these processes go on, some preferred stock could be issued, and if this is the case, then you should address that because these stocks normally have preferences over dividends and some other things from the company. And the second thing is the liquidity aspect, because sometimes this can limit you as an investor. For example, if you decide to invest in one of these startup projects, you have to know that your money will not return to you in a long time because they are only starting the curve of growth. So you will not have that money to invest in some other things for a long time.
Most of the companies that pitch regularly on crowdfunding platforms like Crowdcube are in their initial stages. This means higher levels of uncertainty than proven business models or established firms that trade in more regulated markets. One important risk to note is the risk of scarcity of dividends. Given the nature of a startup or a growing company with limited funds, if the business that you invest in becomes successful, this will mean that they will use up all the cash in hand to keep growing the business. This means no dividends in the short or medium term for investors. If you are investing in a typical company in Crowdcube, you should be aware that your earnings will most likely come from a buyout or an IPO. You should also be aware that the chances of this happening are slim.
We recommend our customers to review their portfolio and begin to plan how much they can spare to invest in a product as Square Nut. According to our financial risk theory, you should diversify your portfolio and find the perfect cap M that will satisfy your expectation and your needs. When you invest in a new startup company, the risks involved are huge, and you should only dispense one small part that you think is arbitrary in the event of a negative return.